So as we discussed in Friday's live recap, the markets got overextended to the downside into better areas of support where responsive buyers stepped in. And at this point, heading into the open, our short-term bias is going to be neutral and our intermediate-term bias will continue to be bearish. And in order for the markets to continue selling off below their recent lows, we will need to see excess weakness and big and sustained downside momentum in real time. So given that the markets got oversold and overextended into better areas of support, now the onus is going to be on the sellers in order for the markets to push through those better areas of support. And that's exactly why our short-term bias is neutral and we need to be open to the market moving in either direction. And anytime our short-term bias is neutral, we need to be much more focused on the real-time intraday situation and give more weight to the intraday bias. Heading into the open, we have pre-market resistance at 5,031 to 38.5, and a breakout above that area would be a sign of continued strength. And from there, if ES can take out 5,045 to 48.5, that would serve as an intraday bullish indication, and that can then result in a test of the initial resistance zone at 5,054.5 to 64.5, and a break and hold above initial resistance on broad market strength and sustained upside momentum would serve as an intraday bullish confirmation, and that can then open the door for a test of 5,078 to 88, where sellers may still be active on first test, and then as the market heads higher, it will be running into better and better resistance, and there will be a higher probability of sellers stepping in. So if we get a successful breakout above initial resistance, ES can test 5,078 to 88. That is very much within the range potential of the day. And then the 5,093.5 to 5103.5 is a better area of resistance. It's another bias confirming zone, and there is a higher probability of sellers stepping in there. And then 5117 to 27 marks the range extreme. Now, so far the market is running on below average volume, and if that theme continues, then it's unlikely that the market will be able to push into a range extreme in either direction. On the downside, we have aggressive support at 5,020 to 24, followed by the pre-market support zone at 5,007.75 to 17.75, and a break and hold below pre-market support would be an intraday bearish indication, which can then result in a move down into the gap fill at 5,003.75 and the initial support at 49.91 quarter to 5,002.75, where buyers can still be active and defend, and a break and hold below initial support on broad market weakness and sustained downside momentum would serve as an intraday bearish confirmation. So that is the market context and plan heading into the open. Again, be mindful of the ideas that were discussed in Friday's live recap about the markets being overextended and exhausted into better areas of support, and now there being a decent potential for buyers to step in. That is the theme that we have seen play out in the overnight session. And now if that theme is going to continue, we want to see a breakout above pre-market resistance and 5,045 to 48.5, and then a break above initial resistance would confirm that bullish idea, and that can then bring the resistance areas above into play. So that is the market context and plan heading into the open. Let's see how the real-time situation shapes up and how the market behaves at the pre-market and initial resistance zone on the upside and the pre-market and initial support zone on the downside. That's going to help set the bias and tone on the day, and we'll take it from there.